And welcome back to this CNBC special, Crypto Night in America. We are continuing to follow breaking news. Voyager Digital announcing today it's the latest crypto firm to suspend withdrawals, deposits, and trading. Voyager's exposure to the embattled crypto hedge fund Three Arrows Capital includes 15,250 Bitcoin and $350 million worth of USDC. And here to shed some light on what forced liquidation of Three Arrows means for creditors like Voyager is Mackenzie Sagalos. Mackenzie, how have Three Arrows issues impacted the broader crypto community?
So the crypto market is falling apart right now, Frank, and the latest casualty is Voyager Digital. Voyager's big announcement today comes just a few days after the once very prominent crypto hedge fund, Three Arrows Capital, defaulted on a loan to Voyager worth more than $670 million. Now, at the time, Voyager said, hey, no problem. Alameda Ventures has already committed to $500 million in financing. We're all good, but clearly that wasn't enough to keep things running as usual. And so the fallout from the forced liquidation of Three Arrows Capital, or 3AC as it's also called, has begun. Remember, just a few months ago, 3AC had $10 billion in assets under management. Now it's failing to meet margin calls, liquidating its holdings by court order after failing to repay its creditors. I mean, it's even being reprimanded by Singapore's central bank, which is where the fund is based, for providing false information and exceeding the maximum amount of money that it was allowed to manage. This is why there are such big concerns about a knock-on effect across the crypto market more broadly, exactly like what we saw today.
So, Mac, I've been following some of your reporting. Three Arrows, one of the biggest crypto hedge funds, widely respected. What went wrong here? Was it just the price drop, or did they also make some mistakes?
Right. So 3AC has been around for a decade, and it really was this darling of the bull market in 2021. But what we've seen in the last few months is this sort of perfect storm of black swan events. The price of cryptocurrencies has plummeted, and that affected any firms with exposure to crypto, but especially 3AC, which had this highly leveraged trading strategy that was unsustainable as the price of cryptocurrencies dropped. And then in May, you had the implosion of a very popular U.S. dollar peg stablecoin project called UST. Three Arrows Capital had exposure to that project, reportedly lost more than $200 million. So it's just been this string of bad luck for the fund.
A lot to unpack there. Mackenzie Sagalos, we appreciate it.